Things kind of tailing off here in the grain markets as we get deeper into our trading session on what we call Crop Progress Tuesday. We had those crop progress numbers yesterday and just tremendous planting progress last week, as everybody suspected. Let's look at our corn market right now. And on the corn, and our quotes provided by bar chart, still higher on the day, but we're about 10 cents off of our earlier highs, believe it or not. And still, July is 14 cents higher. So that just goes to show how big the gains were early this morning. 693.5 is our last trade. December corn now at 574 3/4 is up 11 3/4. So even now they're still widening that spread out a little bit on the nearbys by a couple of pennies over the December crop. Let's take a look at that soybean market. And right now, July soybeans 9.5 higher at 1533.5. And that's 20 cents off of our earlier high. What does that mean? November now 8 3/4 higher at 1353.5. That's 16 cents off of its earlier high this morning. And in the wheat market, when you get to Chicago, you have July wheat 3 3/4 higher now at 721 3/4. That's interesting because that's 11 cents off of our earlier high there. And in Kansas City wheat, July is now 5 1/4 higher at 693 3/4. That would be off its earlier high by 12 cents. And in the Minneapolis market, you now have July trading 4 3/4 higher at 763.5. Brian Hoops joins us now. He's with Midwest Market Solutions in Springfield, Missouri. Well, we were not surprised to see the planting progress that was indicated by USDA yesterday, but if you can you explain what the real situation is in South America? I'm hearing some analysts are really reducing their corn production estimates. And first of all, I wondered if you agree with that and what you're actually calculating when you take a look at Brazilian production now.
Yeah, good question, Marlon. And that's really the one thing that's really the bullish driving force here for the corn market. It's not so much, any type of slow emergence or planting delays or anything like that. That's kind of been absorbed into the market and really not a factor anymore when we talk about our emergence. In fact, is right on par with what we normally are. Our planting pace is a little bit ahead of normal. So all that is kind of thrown out the window. You look at South American weather, especially in Brazil. That's the real catalyst in here, especially for these old crop contracts. There's private analysts that lowered their estimate of the crop in Brazil significantly, down to nearly 100 million tons from 105 that they were at previously. That's a pretty big, substantial drop. And it tells us that Brazil is going to stay out of the export market. They just won't have enough crop to be a major exporter this summer. And that could open the door. And that's what open the door for U.S. prices to work their way into some export channels. And that's what the May and the July contracts are trading. It's trying to curb our demand by moving prices higher, but it just may be forced to look at this situation with Brazil that we are going to be able to export more corn, and that's going to tighten our balance sheets even further.
So question, we have corn trading about 13 cents higher, and you have wheat. If we can take a look at our Chicago wheat market right now, it's currently only trading 3.5 higher on July. What's the deal? Is wheat a follower now? Is it just following along with the corn to try and keep up, or is it a totally different fundamental set here on the wheat?
Yeah, I think a part of it is that, the wheat market needs to keep pace with the corn. We're hitting well above the $7 mark in May corn, 755 area. So we're outpacing Chicago wheat at this time. It needs to try and rally and keep up. Otherwise we're going to continue to use too much corn. We need to shift some of that demand over to wheat possibly. We have more supplies of that here domestically than what we do for corn. But wheat's also reacting to a drop in crop condition ratings last night. The Kansas City contract, the hard red wheat contract, had ratings probably the second lowest in the last 10 years, while the Chicago soft red wheat contract ratings were still pretty high, relatively speaking. And then Minneapolis is trading off of dry weather in the northern spring plains and very little in the forecast. So it's going to be hard to germinate that spring wheat crop.
Just a real quick question here, Brian. Has corn has corn ever been worth more than wheat on the futures?
Well, it probably has. I can't really pinpoint the exact day or time, but I would imagine if we look back at like 1996, for example, when we had a very short crop year in 95 and 96 when prices skied high, rallied real sharply. That's a year I would go back and look at. That's a real possibility that it happened during that time frame.
Wow, they're not that far apart right now, and narrowing up that spread here about a dime today. Brian, we'll come back and look at our livestock trade here in just a moment. Don't go anywhere. We'll be right back. Well, Brian and I were talking during the break, and actually, if you look at the nearby May contract, and let's just bring this up for kicks and giggles here on the corn, $7.49 is the trade on the May corn. Of course, this is in delivery. I mean, it's all kind of academic here, but $7.49 on May corn right now. If you look at Chicago May wheat, $7.30. Corn is 19 cents higher than May Chicago wheat. Look at Kansas City on the May contract, $6.86 3/4, and corn is $7.49. Oh my, yeah, take me away. I think I've seen it all now. Looking at the live cattle. Here we go, and we are now showing June live cattle down $2 at $113.30. We have August down $1.85 at $116.50. Definitely the most weakness on the nearby contracts. On the feeder cattle market, we currently have the August contract down $3.47 now at $143.32. Look out below. We're about 20 cents, not even that, off of our low of the day at this point. And from our earlier high this morning, when it was at $146.90, we're off of that now by $3.65. If you look at the lean hog trade today, lean hogs are hanging on to gains, small gains at that. June is up 27 cents. We're at $112.92. We had been over $113 on June and July. We're just, well, July just clicked back to 113 right now. We're up 92 there. Brian, what's going on? Cattle really taking a nosedive here. It looks like the support is not holding.
Yeah, you're exactly right. We broke through some key support in the June contract this morning. Show lists are just a little bit larger than last week, and that's a disappointment to the trade. They were hoping that we could see these show list numbers get cleaned up, and did not happen. So it's not much of a change, but a little bit larger numbers is weighing on the futures. Of course, the higher corn prices is really hurting the feeder cattle market, and it looks like cash is going to be lower again this week. Calls are steady to $1, maybe even $2 weaker. And with the futures market trying to anticipate that, I think we're probably getting a little bit overdone. I don't know that cash is going to go down to the 113 area like June suggests, but with larger numbers of cattle that we're feeding here in the next several weeks, along with the higher corn prices, futures really are just kind of faced with a lot of technical selling and really pressuring that June and the August contract. What
a weird dichotomy. 113 on June futures, and the beef cutout values yesterday got within 70 cents of hitting $300. We'll get a new update there in about 35 minutes from right now. Incredible times. Brian, thank you for helping us navigate the trade today. I appreciate it. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Christina, back to you.